I believe, if you want to listen to me, that you should consider the possibility that stocks could come down pretty dramatically in a short window of time going into the next part of this year. Today we're going to be talking about record credit card debt, a big slowdown in China, plus a brewing economic storm that CNBC says is coming. We're also going to talk about the LA workers strike, which is going to be big when they combine with the actors and the writers. And I got a special surprise for you, a video of Michael, who came from Amsterdam. He's a long-time subscriber. He's a lifetime subscriber. He's done some of the courses. He's in Canada. So Jeremy and I took him to lunch yesterday. I've got a video of that. You guys are going to want to see it. More than 11,000 Los Angeles workers plan to go on strike today. This is from yesterday. For the first time in more than 40 years. Shuttle drivers at Los Angeles' International Airport, trash truck operators, and port boat captains are among the workers planning to strike for 24 hours. This is from CNN. According to the union that represents many of the city's public sector staff, employees feel stretched thin amid hundreds of job vacancies in the city. Los Angeles is also the epicenter of the Hollywood actors and writers' strikes that have brought most entertainment production to a standstill. The union, representing 15,000 hotel workers, have staged rolling strikes in the city since the start of July. How do you think this is all going to play out? What do you think Los Angeles is going to look like after a couple of weeks of no garbage collection? If you want to empower the Peter Leeds brand to do more and give you guys more, please consider joining the Peter Leeds Army. There's a link below this video. Now, this is from CNN. The U.S. economy may be growing, but persistently high inflation coupled with spiking interest rates have been weighing down consumers. For the first time, America's credit card debt hit a record. That's a weird thing to say because if it says a record, then it's obviously for the first time. Anyways, they hit the record of the undesirable milestone of $1 trillion. $1 trillion in credit card debt, according to data released Tuesday by the Federal Reserve Bank of New York. The spike in nationwide credit card debt comes at a time when interest rates have quickly vaulted to a 22-year high. Bank of America reported that more people are tapping into their 401ks because of financial distress. Now listen very carefully to this next part. It goes into a lot of things I've been telling you guys or talking to you guys about. While hardship withdrawals are being made by only a fraction of overall plan holders, experts say it's an indication that cracks may be forming in households' financial situations. And with federal student loan payments set to resume in October, another monthly bill could inevitably force more Americans to rein in their spending even more. This is an article from CNBC, the title of which was Correction Coming? So I'm just going to go through this article. I'm going to read a couple parts to you that matter to you, that are going to give you insights into where they think the market's going to go and why. And I'm also going to throw in a few of my own comments. So let's get into this. Market storm may be brewing. Stocks could be in for a downturn in the near term as technical and seasonal factors, combined with pressure in the banking sector, conspire to derail the rally seen this year. Here's a chart of the S&P 500 index that they include with this article. Oppenheimer technical analyst Ari Wald noted over the weekend that seasonal headwinds are also at play. I would ask Ari, aren't they always at play? But if he wants to say that, it's fine. We show the S&P 500 typically bottoms in late August in a pre-election year. We believe the index becomes increasingly attractive toward 4,300. The S&P 500 would have to drop 4.8% to reach that level. On top of that, August is usually a tough month for stocks. The S&P 500 averaged just a gain of 0.1% in August, going back to 1950, according to the Stock Traders Almanac. That makes this month the third worst for the broader market index. In August 2022, it dropped 4.2%. In the article, it says, bottom line, after a strong July market performance that drove the S&P 500 to the highest level in more than a year, the market may be primed for a pullback. You have to make your own decisions and learn what you need to learn to make those decisions. I'm telling you my opinion. I believe the markets are going to come down from here, and possibly very substantially. I'm willing to be wrong in the sense that you're avoiding a lot of major downside risk if you're missing out on 5%, 10% gains on the overall market indexes. If that's how you want to invest, then do that. You don't need me for that. But I believe, if you want to listen to me, that you should consider the possibility that stocks could come down pretty dramatically in a short window of time going into the next part of this year. I will admit, though, that there are a lot of pressures that are going to be driving or pushing stocks towards higher levels, such as the next bout of quantitative easing that they dump onto us, such as when they go into an easing cycle for the interest rates, basically lowering rates when they start until when it's over. Historically, stocks have done about 12% better over a year and a half or longer. So you have to consider all factors and decide for yourselves what you think is going to happen. I'm just telling you what I think is going to happen. And China just came out with their import and export numbers, which came in much weaker than most people were expecting, but you probably expected it. We've been talking about this. China is slowing down. Germany is slowing down. Other countries in Europe are going to go into a recession pretty soon if they're not in one already. I'm telling you guys, and it's all playing out now. This has been playing out as I've been telling you. Listen to the numbers that came out from China in terms of their imports and exports. Some of these exports were going to America. We're not buying as much stuff anymore. This is from CNBC. China reports double-digit plunge in July exports and imports, missing expectations. China reported trade data for July that showed worse than expected drops in imports and exports. The drop pointed to falling demand overseas and in China. That's very significant. The people in China are buying less things from China. People in America are buying less things from China. China said that their exports fell by 14.5% in July from a year ago, while imports dropped by 12.4% in US dollar terms from a year ago. That's worse than what analysts had expected. A Reuters poll predicted a 12.5% decline in exports in July from a year ago in US dollar terms. China's exports to the US plunged by 23.1% year on year in July, while those to the European Union fell by 20.6%. Exports to the Association of Southeast Asian Nations fell by 21.4%. China's imports from Russia fell by 8.4% in July from a year ago. And here's a couple more points from a couple more articles about this aspect of the US debt bomb, the credit card debt, consumer debt. As credit card debt tops $1 trillion for the first time, a huge test for cardholders is coming. That test being where they're talking about is that student loan payments are going to have to be resumed next month. Credit card balances have now notched 7 consecutive quarters of year-over-year growth. The resumption of loan payments will be a huge test for many cardholders, says one expert. Collectively, Americans now owe more than $1 trillion on their credit cards. Total credit card debt rose nearly 5% in the second quarter to $45 billion. 5% in one quarter annualized as 20% a year. Although delinquency rates are still low by historical standards, they're very low by historical standards. But what happens? They increase from a low base once people are getting affected by the increased interest rates, which take a little bit of a lag till they really start having the most of their impact on people. You're going to see delinquency rates of credit cards, auto loans spiking. It'll look like it's spiking on the long-term chart, but it won't be over days or weeks. It'll go up fast though. The Fed's measure of credit card debt 30 or more days late rose to 7.2% in the second quarter, the highest rate since the first quarter of 2012. As promised, here's a clip of Michael from Holland who joined us for lunch yesterday. So Michael, where did you first hear about me and how did you get to know me? Tell me about your journey.
A little bit about the journey. First I read a book, came into contact with penny stocks and started searching further. So the first point of contact was the book, Penny Stocks for Dummies. Very enthusiastic about that, so I tried to see if there's more services Peter was providing, and fortunately, very lucky, he provides the service, technical course that was later, but I got his subscription for the penny stocks, an annual subscription, and then 3 months later I decided to become a lifetime member. So from there onwards, I got the technical course. I haven't got the company course because I know quite a bit about assessing companies myself. Maybe that's still in the future. But I'm now on holiday with the family in Canada. So fantastic moment to reach out and see if Peter would be available for a coffee or that sort of things. I already did that 6-7 months ago. He said, yeah, let me know when you're there. So I did so, and fortunately enough, he and his very good friend Jeremy were able to join me for lunch today, which I really enjoyed. So yeah, hopefully the next time I'm able to host them in Amsterdam or somewhere near Amsterdam at the beach and return the favor, because I really enjoyed it. Thank you.
It's a guarantee. Count on it, okay?
Will do.
Great
Thank you very much.
Great lunch. It was a great day.
Yeah, me too. I really enjoyed it. So thank you very much, guys. Fantastic.
If you want to turn a few $100s into much more, the best way to do it is with the Peter Leeds newsletter. We do all the work for you, putting thousands of companies through our 29-point leads analysis system, and then revealing to you which stocks we expect to explode in price in a short window of time.